ExamPrep.School. Texas Surplus Lines Insurance Exam, exam code INSTX-Surp60. There are 5 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Contracts, general insurance principles, Texas statutes and rules pertinent to surplus lines. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. In insurance terminology, risk is most accurately described as A. Uncertainty regarding the frequency, severity, and timing of future loss events. B. Variation in possible outcomes measured by statistical dispersion. C. Intentional exposure to harm for potential gain. D. Process of shifting potential loss from one party to another. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. The correct answer is uncertainty regarding the frequency, severity, and timing of future loss events because insurance risk concerns unknown loss occurrences rather than statistical variation, intentional acts, or transfer mechanisms. Reason B is not correct. Statistical dispersion describes variability but does not capture the insurance concept of uncertain loss occurrences. Reason C is not correct. Intentional exposure for gain reflects moral hazard, not the definition of risk itself. Reason D is not correct. Shifting loss is a risk management technique, not the definition of risk. Question 2. Which of the following scenarios best exemplifies a pure risk rather than a speculative risk? A. Loss of property due to accidental fire damage. B. Fluctuation in the value of a stock portfolio. C. Launching a new business venture, aiming for profit. D. Wagering money on the outcome of a sporting event. The correct answer is A. The correct answer is a loss of property due to accidental fire damage because pure risk involves only the chance of loss or no loss, without possibility of gain. Reason B is not correct. Stock value changes include the possibility of gain and loss, making it speculative risk. Reason C is not correct. Starting a business carries both profit and loss potential, which is speculative risk. Reason D is not correct. Wagering involves chance of both winning and losing, classifying it as speculative risk. Question 3. Which of the following is an example of a physical hazard? A. A worn electrical cord with exposed wiring. B. A policyholder exaggerating claim amounts. C. An insured deliberately skipping safety inspections. D. A negligible change in market interest rates. The correct answer is A. The correct answer is a worn electrical cord with exposed wiring, because a physical hazard is a tangible condition that increases the chance or severity of loss. Reason B is not correct. Exaggerating claims reflects moral hazard, not a physical condition. Reason C is not correct. Skipping inspections shows careless behavior, which is a morale hazard rather than a physical hazard. Reason D is not correct. Market interest rate changes are financial risks, not physical hazards. Question 4. Which statement best defines moral hazard in insurance? A. Indifference toward loss prevention, resulting from policy ownership. B. Uncertainty regarding the outcome of an insured event. C. A physical condition that increases the frequency of loss. D. Intentional or fraudulent acts by an insured to profit from a loss. The correct answer is D. The correct answer is intentional or fraudulent acts by an insured to profit from a loss because moral hazard involves deliberate dishonesty to cause or exaggerate loss. Reason A is not correct. Indifference toward prevention describes morale hazard, not moral hazard. Reason B is not correct. Uncertainty about outcomes defines risk, not moral hazard. Reason C is not correct. A physical condition is a physical hazard, not a moral hazard. Question 5. An insured driver routinely ignores dashboard warning lights. This behavior best represents which type of hazard? A. Moral hazard. B. Moral hazard. C. Physical hazard. D. Speculative risk. The correct answer is A. The correct answer is morale hazard, because it arises from an attitude of carelessness that increases the likelihood of loss without intentional wrongdoing. Reason B is not correct. Moral hazard involves intentional fraudulent actions, not mere carelessness. Reason C is not correct. Physical hazard is a tangible condition, not a behavioral attitude. Reason D is not correct. Speculative risk involves chance of gain, which is unrelated to this attitude-based hazard. Question 6. During a severe hailstorm, ice pellets pelt a homeowner's roof and siding, causing significant damage. In insurance terminology, the hailstorm is an example of which of the following? A. Hazard, a condition that increases the chance of loss. B. Peril, the direct and immediate cause of a loss. C. Risk, the uncertainty regarding potential financial loss. D. Exposure, the possibility of loss or amount at risk. The correct answer is B. The correct answer is peril because the hailstorm represents the direct and immediate cause of the physical damage, consistent with the definition of peril in insurance terminology. Reason A is not correct. This describes a hazard, which is a condition that increases the likelihood of a loss rather than the actual cause of the damage. Reason C is not correct. This describes risk, which refers to the uncertainty of loss rather than the event that causes the loss. Reason D is not correct. This defines exposure, which is the scope or amount at risk, rather than the specific cause of a loss. Question 7. Which of the following accurately describes the ownership structure of a stock insurer? A. Owned by its policyholders as direct equity holders. B. Obligated to issue only participating policies. C. Organized as a corporation with shareholders who receive dividends. D. Structured as a reciprocal exchange of insured subscribers. The correct answer is C. The correct answer is that a stock insurer is organized as a corporation with shareholders who are entitled to dividends when declared. Reason A is not correct. Ownership by policyholders applies to mutual insurers, not stock insurers. Reason B is not correct. Issuing only participating policies is a feature of mutual insurers, whereas stock insurers may issue non-participating policies. Reason D is not correct. A reciprocal exchange is a contractual pooling arrangement, distinct from a stock insurer's corporate structure. Question 8. In a mutual insurer, who is primarily entitled to receive declared dividend distributions? A. Corporate shareholders. B. External reinsurers. C. Policy owners. D. Regulatory commissioners. The correct answer is C. The correct answer is that mutual insurers distribute dividends to policy owners since they are the insurer's members and equity holders. Reason A is not correct. Corporate shareholders are stakeholders in stock insurers rather than mutual insurers. Reason B is not correct. Reinsurers do not participate in dividend distributions of the ceding insurer. Reason D is not correct. Regulatory commissioners oversee insurance compliance but do not receive insurer dividends. Question 9. Within a reciprocal exchange, what term describes the individual empowered to manage insurance operations on behalf of the subscribers? A. Syndicate manager. B. Risk retention group. C. Attorney in fact. D. Surplus lines broker. The correct answer is C. Reason A is not correct. Syndicate managers operate in Lloyd's markets, not in reciprocal exchanges. Reason B is not correct. A risk retention group is a type of insurer, not the managing agent of a reciprocal exchange. Reason D is not correct. A surplus lines broker places coverage outside the standard market and does not manage a reciprocal exchange. Question 10. Which of the following is a defining characteristic of a Lloyd's Insurance Association? A. Operates as a centralized underwriter association. B. Underwritten by individual members grouped in syndicates. C. Issues only non-participating policies. D. Owned by its policyholder shareholders. The correct answer is B. The correct answer is that Lloyd's policies are underwritten by individual members organized in syndicates rather than by a single corporate entity. Reason A is not correct. Lloyd's is a marketplace of syndicates, not a single central underwriter. Reason C is not correct. Lloyd's offers both participating and non-participating policies depending on the syndicate. Reason D is not correct. Ownership by policyholder shareholders describes mutual insurers, not Lloyd's. Question 11. A consortium of specialty food distributors struggling to obtain affordable product liability coverage decide to form a risk retention group under the Federal Liability Risk Retention Act. What is the primary purpose of this risk retention group? A. Pool and underwrite liability exposures of its members to secure coverage at stable rates. B. Offer reinsurance treaties to third-party insurers for excess liability obligations. C. Extend property insurance coverage to non-member firms beyond their liability risks. D. Invest pooled premiums in high-yield securities to maximize returns for members. The correct answer is A. Risk retention groups are formed specifically to pool and self-insure the liability risks of their member organizations, enabling access to affordable and stable liability coverage. Reason B is not correct. Risk retention groups cannot act as reinsurers for other insurers. They only insure their own members' liability exposures. Reason C is not correct. Risk retention groups are limited to providing liability insurance to member organizations, not property coverage to non-members. Reason D is not correct. The core objective of a risk retention group is to ensure member liability risks, not to pursue investment returns. Question 12. Which of the following best exemplifies a risk avoidance strategy? A. Purchasing liability insurance to transfer potential losses. B. Discontinuing production in a high liability market. C. Implementing safety training to reduce accident frequency. D. Allocating reserve funds to cover minor losses internally. The correct answer is B. The correct answer involves eliminating exposure by stopping operations in the risky area. The other options represent transfer, reduction, or retention of risk rather than avoidance. Reason A is not correct. This action transfers risk to an insurer rather than eliminating the exposure itself. Reason C is not correct. Safety training reduces the likelihood or severity of losses but does not fully remove the exposure. Reason D is not correct. Allocating reserves retains the risk internally instead of avoiding the exposure. Question 13. Which action is primarily a risk reduction technique aimed at lowering both the likelihood and severity of potential losses? A. Ceasing operations in a hazardous facility. B. Raising policy deductibles to self-insure small claims. C. Purchasing reinsurance to shift excess liability. D. Installing advanced fire suppression systems in a factory. The correct answer is D. The correct action reduces both frequency and impact by controlling hazards directly. The other options involve retention, transfer, or avoidance rather than reduction. Reason A is not correct. Ceasing operations avoids exposure altogether rather than reducing it. Reason B is not correct. Raising deductibles increases retention rather than reducing the risk event itself. Reason C is not correct. Purchasing reinsurance transfers risk to another insurer instead of mitigating it at the source. Question 14. Which of the following is an example of risk retention by a business? A. Relocating facilities away from flood-prone areas. B. Transferring large exposures to a reinsurer. C. Implementing employee safety training programs. D. Establishing a high deductible on liability insurance policies. The correct answer is D. Setting a high deductible means the business absorbs losses up to that amount internally, which is classic risk retention. The others represent transfer, reduction, or avoidance. Reason A is not correct. Moving facilities eliminates the risk exposure instead of retaining it. Reason B is not correct. This option shifts risk to another insurer rather than retaining it. Reason C is not correct. Safety training reduces the chance of loss rather than retaining it. Question 15. A manufacturing firm purchases an equipment breakdown insurance policy with a $25,000 deductible, agreeing to cover the first $25,000 of any loss while transferring any excess loss payments to the insurer. Which risk management method is the firm primarily employing for losses above the deductible? A. Risk retention. B. Risk avoidance. C. Risk control. D. Risk transfer. The correct answer is D. The correct answer is risk transfer because the insurer assumes financial responsibility for losses exceeding the deductible, transferring that risk away from the firm. Reason A is not correct. This describes risk retention, which involves the firm covering losses itself rather than shifting them to an insurer. Reason B is not correct. Risk avoidance entails eliminating an activity to avoid risk entirely, which is not occurring here. Reason C is not correct. Risk control focuses on reducing the frequency or severity of losses through safety measures, not on shifting financial responsibility. Question 16. Under Texas common law, an insurer's acceptance of an applicant's offer is effective when it is A. Filed with the Texas Department of Insurance. B. Delivered to the applicant by hand. C. Received by the applicant's broker. D. Deposited with the U.S. Postal Service with proper postage. The correct answer is D. The mailbox rule under Texas common law deems an insurer's acceptance effective upon proper deposit with the Postal Service, not upon delivery or filing. Reason A is not correct. Filing with the regulator is unrelated to contract formation between insurer and applicant. Reason B is not correct. Hand delivery is not required. The mailbox rule makes deposit with the Postal Service sufficient. Reason C is not correct. Receipt by a broker does not trigger formation. Effectiveness is based on mailing. Question 17. In a Texas insurance contract, the legal concept of consideration is best described as A. The insurer's obligation to provide a policy and the insured's duty of utmost good faith. B. The insured's payment of a premium and the insurer's promise to indemnify. C. The insured's premium financing agreement and the insurer's subrogation right. D. The insurer's approval of a binder and the insured's submission of an application. The correct answer is B. Consideration in insurance is the mutual exchange of the premium from the insured and the insurer's promise to indemnify against covered losses. Reason A is not correct. Utmost good faith is a duty, not the bargained-for exchange of value. Reason C is not correct. Financing terms and subrogation rights are collateral provisions, not the core exchange. Reason D is not correct. Binder approval and application submission precede contract formation, but are not the exchanged value. Question 18. Which scenario would most likely render an insurance contract voidable under Texas law due to incapacity? A. A corporation applies for a policy without filing articles of incorporation. B. An insured fails to disclose pre-existing damage at policy inception. C. A policyholder's property is destroyed by a covered peril shortly after binding. D. A 16-year-old individual purchases an auto policy without a guardian's consent. The correct answer is D. Minors lack legal capacity. Under Texas law, a contract with a minor is voidable at the minor's option, unlike misrepresentation or corporate formalities. Reason A is not correct. A corporation has capacity but must satisfy formation requirements, so capacity itself is unaffected. Reason B is not correct. Omission of facts relates to material misrepresentation, not capacity. Reason C is not correct. Destruction of property after binding involves risk change, not party competence. Question 19. A local entrepreneur purchases a surplus lines policy to cover liability claims arising from an unlicensed gambling establishment. The policy covers bodily injury claims of patrons. Under the legal purpose doctrine, is the policy enforceable? A. It is enforceable because indemnifying third-party claims does not facilitate the illegal business. B. It is unenforceable because public policy prohibits insuring unlicensed gambling operations. C. It is enforceable if the insured obtains the proper license during the policy term. D. It is unenforceable because contracts with illegal subject matter are void under the legal purpose doctrine. The correct answer is D. This option is correct because the legal purpose doctrine requires that the subject matter of a contract be lawful. An insurance contract covering liability for an unlicensed gambling operation involves illegal activity and is therefore void. Reason A is not correct. Insurance of liability claims does not legalize the underlying illegal business. Contracts with illegal subject matter remain void. Reason B is not correct. Although public policy prohibits insuring unlicensed gambling, the core legal purpose doctrine voids any contract involving unlawful subject matter. Reason C is not correct. Obtaining a license after the contract's inception does not retroactively legalize a contract formed for an illegal purpose. Question 20. Which of the following items is least likely to appear on the declarations page of a standard property insurance policy? A. Named insured and address information. B. Full text of the conditions clauses. C. Limit of insurance for covered perils. D. Policy inception and expiration dates. The correct answer is B. The conditions clause appears in the policy's body, not on the declarations page, which summarizes key facts and coverages. Reason A is not correct. Named insured and address information are standard declarations page entries. Reason C is not correct. Coverage limits are a primary element listed on the declarations page. Reason D is not correct. Policy effective and expiration dates are central to the declaration summary. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.